Welcome back to the channel, everybody. I am Mick Alfany. I want to cover a little bit of Travelex Bank information, okay? That'll be the second chapter. Travelex Bank is one of our banks that is using Ripple and is looking healthy. We work with a bevy of healthy banks, hundreds of healthy banks. Now, but before that chapter, I know there's going to be some people out there to say, hey, Mick, you say Ripple is working with healthy banks. What happened with SVB? I know it's coming. Yeah, I know you're going to ask that question. It's reasonable. That's reasonable. I'm going to read this little tidbit here to show you how the Fed kneecapped not only SVB, the Fed is kneecapping a lot of banks. That's why this article is literally titled Silicon Valley Bank was the tip of a banking iceberg. Just the tip. Because what the Fed is doing is good. You've seen all the layoffs happening, don't you? Well, the Fed affects the economy in more ways than just causing layoffs with raising interest rates. This is not the end, but people have to just stay up to date on the catalyst. There's no telling what's going to happen, but I mean, things are leaning in one direction. We're using cause and effect here. I'm gonna read just this little tidbit to show you that SVB was considered a healthy bank. It says here from Cointelegraph, before the latest run on the bank, SVB was viewed as not only a profitable banking institution, but also a safe one, because it held $212 billion in assets against roughly $200 billion in liabilities. That means they had a cushion. Remember, we're always talking about liquidity cushions. And keep in mind, this is one of the things that's going to make XRP delicious to the financial system. As it's collapsing, they need a liquidity cushion. XRP can provide it. This is what we are, on-demand liquidity. So this plays in our favor. Anyway, it says they had a cushion of $12 billion in equity, or 5.6% of assets. That's not bad. This is what they're saying. It says that's not bad, although it is roughly half the average of 11.4% among banks. The problem here, keep this in mind as we move forward, because other banks may face the same problem. The problem is that recent actions by the United States Federal Reserve reduced the value of long-term debt, to which SVB was heavily exposed through its mortgage-backed securities, roughly $82 billion. You see where this is going? When SVB flagged to its shareholders in December that it had $15 billion of unrealized losses, wiping out the bank's equity cushion, it prompted many questions. On March the 8th, SVB announced it had sold $21 billion in liquid assets at a loss, stated that it would raise money to offset the loss, but that it announced a need to raise more money and even considered selling the bank, concerned investors significantly, leading to roughly $42 billion in attempted withdrawals from the bank, a bank run. So I hope you absorbed all of that and keep that in mind as we move forward into the future. This bodes well for the new financial system, 100%, because we have the solution. We have a few solutions, actually. ALGO, XLM, instant liquidity, on-demand liquidity. We have a few solutions. We do. However, they were a healthy bank. The Fed is throwing monkey wrenches into the mix. Hey, which is strange now. People are thinking that the Fed is going to slow down because of this, and they are not. I read an article somewhere. I don't think I have it here, but I read an article that says they're not going to slow down raising interest rates because of this, which is mind-blowing. I mean, they're stuck in between a rock and a hard place. I mean, but at the same time, they caused the problems. You know, they're going to have to continue to overprint money. They have to. There's no way they can't. So every time they even come close to a solution, they're going to exacerbate the problem as well. They have to continue to print the money. I mean, just one more time. The problem is that the recent actions by the United States Federal Reserve reduced the value of long-term debt. That's what happened with SVB. So it's not that it wasn't a healthy bank. Just when you have, you get blindsided and you have monkey wrenches thrown in and such like that. I mean, This is possible. This is possible. So they were a healthy bank, but things happen. They should have congealed with the new financial system. They should have relied on a liquidity cushion from Ripple or such. They should have. The whole banking system should have deployed the new financial system by now. But hey, these things are going to happen because of that. But now I wanted to say that to get to this. We have an update from Travelex Bank. This is directly from travelex.corporate-corporate.com. Okay. And they are looking healthy. We deal with only healthy banks over at Ripple. And not only just healthy and them growing, but they're going to grow exponentially once we roll out the entire system and they flip the switch, so to speak. Theoretically speaking, this is what should happen if everything goes according to plan. Not financial advice. I'm not a financial advisor. All right. Now, let's start reading here. Let's scroll down this little document here. And let's begin here with the wholesale section, since XRP is going to be doing interbank payments, wholesale CBDCs, and moving that big money. So let's start here with the wholesale section. First bullet point. It says, while the UK wholesale business continues to reflect a more gradual recovery profile, Q4 saw strengthening in the Africa market, which drove a 50% increase in revenues from Q3 to Q4, albeit from a low base. Logistic challenges remain. Now, keep in mind, so they had a 50% increase in revenues from Q3 to Q4. The logistic challenges that they're talking about, we resolve. So when they flip that switch, when the system is deployed, and trust me, when you're working with banks that have like a multitude of different regions that they work in, that system is going to operate sort of like a net. So when they deploy the on-demand liquidity system, the entirety of the Travelex system will benefit from that. So whether they're in Brazil, in Africa, any of these other places, UK, they will benefit. Okay, that entirety of that system can always rely on that liquidity cushion is what I'm saying. And I mean, if you disagree, let me know in the comment section if you have other thoughts. We have a lot of brilliant people here. So it's a team effort here on this channel. If you have something to offer, leave it in the comment section. I'm always willing to learn and hear you out. But we solve some of those logistic issues. Remember, we can do offline QR code payments. Some of these regions that have spotty signals, no problem. That offline payment comes in handy. We can do mobile payments as well. So we have all of these capabilities. We can adjust liquidity as well. We do have the capability of that without AI. We've used machine learning, but we can also adjust utilizing AI. You know that Ripple has been working on some sort of AI mechanism for about a year now. It's been about a year. They've been quiet on the development of it, and we should get an update soon, probably on the progression of that. But they can adjust liquidity. You need more liquidity? Here you go. No problem. All of it can be automated. This is the brilliance of the XRPL and what will be the main part of the new financial system. Of course, you're going to have probably XRP, XLM, ALGO. That's the three mains, in my humble opinion. And then you have Quant connecting everything together, the legacy system and the new financial system, which obviously they need. So everything's looking good right now. Nothing has changed at all. In fact, things are slanting more in the favor of the new financial system now that people are doubting the banks and they're starting to see the flaws in the banks. And since this event has been inescapable, the mainstream media actually has been forced to talk about some of the shortcomings of the banks and the United States Fed as well. So that has been very good. A lot of eyes have opened. We'll see how everything goes. All right. So now it says Brazil continue to significantly outperform 2019 thanks to strong commercial development in the bank business with customers who are less sensitive to seasonal trading. Next bullet point. 2021 full year central and shared overheads are 34 million euro, favorable to 2019 following significant focus on rationalizing the central cost base. Full year results reflect the injection of 60 million euro of additional funding, with 20 million euro received in February, 25 million euro in June, and 15 million euro in October. This additional funding, together with further funding of 35 million euro in January 2022, has ensured there is sufficient working capital to support current trading volumes. So listen, Everything is looking good. I think that this is the only bank actually, as far as their offering that they have in Brazil, that's specifically for FX, right? So everything is looking good there. So now let's move on to another article, okay? Hope everyone out there is doing well. So this is from Quant. Quant, please keep doing a good job. Oh my goodness, they're doing a good job. And I can't wait for the explosion. That's why I get excited, because that money is right there. And Quant can explode. Just my humble opinion. You don't have to agree. Not here to brainwash you or control your mind and make you think like me. Not at all. Not at all. We're individuals. We can disagree. But this is just my humble opinion. Quant can explode harder than most because of its circulating supply and all of the utility that it brings. Let's get right here to this information. It says, we're proud to announce that our head of innovation, Dr. Luke Riley, has been voted co-chair of NAPA's standardization committee. This year, we've had maybe 3 or 4 major organizations that Quant has one of their top people sitting at the head of. When it comes to the new financial system, the legacy system, remember they had that entire infrastructure that they're sitting at the head of. And I think it was the United Arab Emirates or something like that. You can go back to those old videos, or you can just scroll through Quant's Twitter. They didn't make it a secret. They have a lot of powerful people from Quant sitting at the head of organizations that are going to retool the internet. Look that up. I mean, we did cover it, so I'm sure people downloaded that and screenshot those documents. And I'm sure they probably got it directly from Quant.network as well. But yeah, to retool the internet, they have 2 key people in the board or governing panel, however you want to phrase that is supposed to be at the helm of controlling what Web3 is going to become. That's powerful. If Quant is at the crux of all of these powerful organizations, and Q&T is going to be used, they said it's an integral part of the Quant network system, right? So if Q&T is going to be used for everything, then imagine how high that price can go. Am I being eloquent here? I don't know. I don't know if I am or not, but I just know I'm giving you the raw thoughts that are coming out of my mind on the spot. But anyway, let's continue right here. Then it says, hashtag the foundation of the blockchain economy requires standards as well as interoperability. Quant is looking to dominate. They don't make it a secret that they want to dominate. Every time they go to a panel, they're claiming they want to bring in new clients. And I believe them. And they're working so hard, even though they have powerful partnerships already. Listen, SIA Chain and SIA Partners, they have a deal. Well, I showed you this. A lot of you know, but we have a lot of new people on the channel as well. Let me reiterate for them, okay? Plus, it gets me excited to talk about this every single time. It really does. They have a partnership with the ECB, the European Central Bank. I don't know why I did like that. I felt like I was about to do a Kamehameha or a Hadouken or something. Anyway, they have a deal with the European Central Bank. That's in addition to SIA Chain and SIA Partners and the countless hundreds of banks that they bring to the table. Then they have LAC Chain. They're dominating down in South America. I mean, you tell me, where do you think that Quant price is going to go? You tell me. But I know one thing. When the time is right, boom. That's just my humble opinion. Once again, that's not financial advice. You have to make your own decision. Doesn't matter to me whether you buy Quant, sell Quant, buy XRP, sell it. It makes no difference. I'm here for that bank money. And they're bringing the banks. They're bringing the power. So NatWest proudly presents the new leadership of its working groups. So NatWest, International Association for Trusted Blockchain Applications. And Quant is at the head of it now. There you go. All right, so now let's move on to another article here. It's titled, Crypto Payment Specialist Stellar bridges fiat and stablecoins to Polkadot. Stellar continues to dominate and make themselves the sedimentary base essential layer for the new financial system. This is no different. They continue to do a good job. Cryptocurrency payment specialist Stellar is linking to Polkadot and its sister network Kusama via the newly built Spacewalk Bridge, a move that will connect the 2 blockchain ecosystems with Stellar's fiat on-ramps around the world. The bridge, built by recent Polkadot parachain auction winner Pendulum, aims to connect decentralized finance applications with foreign exchange markets, especially in emerging markets where, since it was founded in 2014, Stellar has built a footprint and partnered with the likes of cross-border payments company MoneyGram. Listen, my word, Stellar's getting so powerful. You have what's going on with the United Nations, right? Stellar Aid Assist. You have MoneyGram. MoneyGram has clearinghouse banks on it as well. They have 4. If you look in their documents, they state clearly they have at least 4 clearinghouse banks that they work with also. I'm assuming they have probably more, but that's what was in that document. Then you have the banks that Stellar's working with outright. You have EveryNet, Velo, LightNet, whatever IBM might do in the future. Everyone's laying low for now. I mean, there's so much going on. And once again, I firmly believe Stellar's going to dominate once the United States actually smells the smelling salt and wakes up and they deploy the new financial system with regulatory clarity. Stellar's going to dominate. This is what I believe. Just what I believe. So this is looking very, very good in my humble opinion. It says, while crypto's banking rails in the U.S. have largely been dismantled, seasoned firms like Stellar, well, you can't have the rails. Right now, there's no regulatory clarity. The SEC is off the chain, so to speak. They're attacking everybody like a wild dog. Yeah, so we've been building around the world, everywhere else been building. But Stellar has firm connections in the United States. Did you see the video that I released recently? The White House called Stellar up. Well, I'm saying called, but they probably sent them an email or something like that. The White House is asking for Stellar's guidance and opinion. You can read it yourself. Go to Stellar's Twitter or stellar.org, whatever it's called, and you can read the document yourself. So Stellar has a firm footing in the United States. I don't want to read this and make it seem like we don't. We have a firm footing. Stellar, ALGO, and Ripple have firm footings in the United States. It's just a matter of regulatory clarity, maybe us winning the SEC case over at Ripple, and then boom, somebody fires that starter's gun and we're off to the races. Possibly. That's if everything goes according to plan. Possibly. All right, so now let's move on here. That was from CoinDesk.com. If you want to read the rest of that article, make sure to check them out. They're doing a great job over there. They've been doing a great job, and Cointelegraph is doing a great job as well. So make sure to give these companies some traffic here. So now, this was tweeted out by Algorand. Okay, now this is from blockchainlawsg.org. All right, and it goes as such. It says, although, and you know, Algorand is very heavy with NFTs. They're going to do a lot with NFTs. Although some jurisdictions have adopted artist resale rights in an effort to embed royalties that compensate original artists during secondary sales, this practice has not been widely adopted. In fact, the Copyright Act of 1976 does not recognize resale rights in the United States for visual artists. That is insane. My word. For visual artwork. It has preempted state legislation to implement ARR frameworks. Despite such regulatory inconsistencies around ARR, artwork encoded as non-fungible tokens on a blockchain can be configured to include lifetime royalties that flow back to artists even upon secondary sales. That is one of the best things ever. And, you know, once NFT markets are more streamlined and easy to use, fine artists are going to take over, and they're finally going to get their just dessert. They're finally going to get what they've been owed to them all along for so long. But let's continue on here because they're going to tell you. It says, moreover, in Web 3.0, an internet where transactions occur on blockchains, creators have the ability to directly list their pieces of on NFT marketplaces, as opposed to relying on third-party brokers to broadcast their content. This we know. In short, NFTs have the potential to decentralize the art industry and level the playing field for artists. When they say that, my word, they're talking about all the traditional artists across the board. And my word, they're coming in. I'm telling you, that next bull run, that's when most artists are going to deploy. They're not going to deploy right now and let their art collect dust and sit on a shelf. They're waiting for that next bull run, and they will deploy en masse, or regulatory clarity. When everybody's saying, oh, you know, NFTs are okay. There's nothing wrong with NFTs. When everyone's thinking positively of crypto and NFTs, they will deploy and they will flood the market. So yes, it levels the playing field because now you don't have these centralized websites that you have to sell on, and they're taking all of this money. They're charging you all of this capital to print on a canvas or on metal, and, and so the price is already high just because you have to print on this certain material. That's been a major problem. right? Oh, you want to print it on wood, it costs this much for the wood. Like, no, now you can sell directly to the customer. And if they want to purchase that particular artwork, now they can put it on whatever they want. And because it's rare, now it's made rare because, non-fungible token, that artwork is not going to be duplicated, cannot be duplicated, should not be duplicated, is worth much more. I don't know. I don't know how to eloquently put that, but as an artist, I mean, I'm not so heavy into art anymore, but for the bulk of my life, I've been an artist and was working in the art industry. But it's just an exciting time, in my humble opinion. All the young artists out there, I hope they're going to take advantage of this in the future when everything is streamlined. So this was a very potent read. Once again, it's from blockchainlawsg.org. All right, it was retweeted by ALGO. It says here, the adoption of NFTs by artists and consumers has been hindered. However, that's what I was talking about before. However, the perception that transactions on a blockchain are harmful, perception that transactions on a blockchain are harmful to the environment. And this is another reason why advertising is good, not just to bring people in, but to let the people know, hey, Algorand is green. Carbon neutral, carbon negative, whatever. Hedera is green. We're not the ones impacting anything. You have to let the people know that you're different from anything they might be negative, like Bitcoin or Ethereum. Even though they're working to green up Bitcoin, they definitely are making big strides in that area. The people still have a mentality that, oh, Bitcoin is bad because Bitcoin is not green. They haven't been told that Bitcoin is greening itself up. So look, that's not our problem. Our focus must be to separate Algorand and Hedera, who have some of the absolute best NFT markets, separated from that negativity. So it's important to do interviews and write articles and put advertisements up, letting the people know, hey, we're carbon neutral and carbon negative. Do yourself a favor. So now let's continue on here to another article. And we were just talking about blockchain. Web3 in blockchain. And here you have LCX talking about blockchain and Web3. Now, LCX is becoming very, very powerful. Keep in mind, they're the only fully regulated and compliant exchange out there, right? If they become a significant part of Web3, what do you think is going to do to that LCX price? You think that LCX price is going to stay down there with everything that they're doing? Let's read this little tidbit here. It says benefits of blockchain and Web3. As widespread adoption of Web 3.0 and blockchain technology continues, organizations are discovering novel ways to utilize this potent mix of technologies. Here are some of the most important advantages blockchain technology can offer your businesses. In other words, LCX is saying, listen, we're about to tell you exactly why you want to use us. We're fully compliant. You can save money, move that money quickly. You can own different things instantly through non-fungible tokens, including commodities and such. We can do it all. You want to trade some currencies or something like that? Here, we'll offer you a token attached to a fiat. You can hold that in our wallet. I mean, they have everything. But first bullet point, greater security. Second bullet point, faster transactions. Blockchain technology can process payments significantly faster. Yeah, and LCX is looking to move all of that money. They're dominating right now. Cost savings. As blockchain networks are decentralized, there are no server costs or other overhead expenses associated with them. Improved transparency, increased efficiency. They're just annihilating the legacy system. That's what they're doing. Obviously, this has to be looked at in an opposite way to the legacy system. Sorry about that. I was searching for a word. I couldn't think of it. There's a word that I could have used to sum all of that up, but it just it's off my mind. It says, these are just a handful of business benefits that blockchain and Web 3.0 can provide. As more organizations investigate this technology, novel applications will soon proliferate. That means it's going to be flooded. The world is going to be flooded with Web3 dApps. It's coming. LCX is letting people know. Do they see what's coming? By integrating these two potent technologies, organizations can create apps that are secure, efficient, and transparent. This relationship between Web 3.0 and blockchain provides the basis for a new digital economy in which assets are safely kept and traded without the need for intermediaries or middlemen. Shots at the legacy system, shots at banks. You see, even though LCX is trying to become a bank, LCX is really crypto at its core. They're sneaking in the back door. They don't really need, they're straddling the fence so they can take money from the legacy system. Yeah, sure, we're trying to become a bank, make deposits with us, but they also have their decentralized exchange. We can come and use us that way as well. They're taking money from everywhere. It's a genius way to play chess. Just my humble opinion. So now let's move on to another article here because I have about 5 left. I don't know if we're going to get to all of them. So this article here is from lsc.co.uk, one of our favorite websites here, very informative, and it's titled "Banks May Be Failing, but Fed to keep raising." I told you before, because they're raising interest rates, they're throwing a monkey wrench in all of these different. It's not just the small businesses, but the banks, big businesses. They're throwing a monkey wrench into their engine, into their plans. But let's read this little tidbit here. I'll let them tell you. So it says here, investors were scared enough by a rash of bank collapses, including the biggest bank failure since the financial crisis, that they switched bets to a much less hawkish Federal Reserve than they had bet on just a few days ago. I don't know why they think the Federal Reserve would be less hawkish. What would make you think that? They have persisted this entire time, except for a short little period where I think it was strategic. They let the people see that it was going up, that inflation was going up in order to justify raising it again, allowing the people to beg for inflation to be brought down. And the people they were all over TikTok. Oh, look at the eggs, the prices of eggs, things like that. And so then they came in and said, hey, okay, we need to help you. We're going to raise interest rates again. And the people can't argue with it. So other than that strategy, they have persisted. Let's continue on here. It says that they switched bets to, okay, the reasoning is that the government will have no choice. No choice? They always have a choice. Will have no choice but to ease up a little on rate hikes, since it was forced to step in to restore faith in financials after its rate hiking helped cause the bank failures. They're going to have a bigger problem than that. Expectations for a 50 basis point rate hike next week have faded to nothing. A majority of investors are still expecting a 25 basis point hike. Maybe that's possible. I just don't see it happening. Traders are putting the probability at around 70%, compare it with 30% for no hike. Okay, that's reasonable. That's reasonable in my humble opinion. According to CME Group's FedWatch tool, Lauren Goodwin, economist and strategist at New York Life Investments, says she believes, quote, recent bank failures will not deter the Federal Open Market Committee from moving forward with a 25 basis point hike in next week's meeting. Her argument is that the Fed can bring stability to banks while also staying, quote, focused on its price stability goal. That's going to be a hard mountain to climb. That has been so far. Some strategists argue that fear will cause banks to tighten lending. It definitely will. Why would it not? I think that's reasonable. That's logical. Tighten lending enough to help the Fed reach its goals. Well, they're going to tighten lending for a myriad of reasons, in my humble opinion. And she quoted Fed Chair Powell's assertion that the, quote, economy doesn't work well for anyone when inflation is high. With today's combo of slowing growth, a lagged impact of tightening lending and monetary conditions, as well as uncertainty around, quote, potentially more restrictive bank lending standards, unquote, Goodwin sees a recession as, quote, a matter of when, not if. Why did they keep saying recession? I just read an article yesterday. A very high individual from India, if you look at that chapter, a high individual from India called it what I've been calling it, a depression. Almost all the brilliant minds in the industry are saying we're heading into a depression. I'm calling it a light version of a depression. It could get deeper, but it's a light version of a depression. Make no mistake about it. It's not a recession. All these people are losing jobs. You got some banks go under. That's depression, folks. And it's not going to get any, I don't expect it to get any better, although I could be wrong, but I don't expect it to get any better because they have to continue to raise interest rates. But at the same time, at some point, they have to print more money. They have to. It's one of the most insane things to observe. They have put themselves in a very difficult position. So what the people should do is look for every possible way to protect themselves. It's not advice. I'm just saying wise ones would protect themselves at all costs. So now let's move on to this next article here. I don't want to run out of time before I can get to this. So this article is from newsbtc.com and it's titled, Is the Fed Failing? Is the Fed Failing? It says, out of their bond portfolio, the United States Central Bank is losing money by paying commercial banks via reverse repurchase agreements, popularly known as reverse repos or RRPs. Scroll down here. Reverse repos are agreements where the central bank, in this case, the Fed, sells securities, that is government bonds, to commercial banks and agrees to repurchase them later at a higher price. Whoa. Oh, that is not good. That is not good. How? Let me continue reading. This allows the Fed to inject liquidity into the market. It's fake liquidity. It's not real. It's not real if you have to do it this way. But this has been coming at a higher cost due to higher interest rates, with news showing that the central bank is hemorrhaging funds. That's what I'm saying. After a shift in its monetary policy, there is a growing concern among investors and financial experts. Yeah, I'm very concerned about that. The Fed's bond portfolio is part of its quantitative easing program following the 2008-2009 global financial crisis. The idea was for the Fed to buy government and mortgage-backed securities, MBS, to keep its interest rates low and stimulate economic growth. This worked to some extent, but the downside is that the Fed is now sitting on many bonds that are losing value on rising fund rates. That's my word. It makes absolutely no sense. Sometimes I wonder what they're thinking. There's a much better way. I'm not going to put that out there to them for free. They don't have to pay for that. They want to know. They want to know. I'm not going to give it to them for free, but there's much better way. I'm not the only one who knows this. Many people know this. There's much better ways to do this. New financial system is one of them. That's the least. There's much better ways. It says their loss appears worse following the collapse of banks like Silicon Valley Bank that use customer deposits to buy government securities. When customers request their money back, the banks must sell the bonds at a discount, causing losses. To make depositors of SVB whole, the U.S. government has to step in to acquire such bonds at face value, reverse repo, which means that the Fed ends up holding these bonds and their losses. The situation has raised concerns about the effectiveness of the Fed's monetary policy. We've been saying for almost 2 years the monetary policy is terrible. It needs to be redone. They're not listening. Nothing has changed. Not majorly, it hasn't. Read the monetary policy. It says, and the impact of government intervention in the financial markets. Critics have pointed out the moral hazards behind providing bailouts to failing institutions, which encourages risky behavior. Yeah, if you're going to bail me out, I can do whatever I want. And can lead to a lack of financial discipline. Sure, why be disciplined? You're going to bail me out, right? And make no mistake about it. So they're not doing direct bailouts, but if you're compelling all the bigger banks to come in and bid, forcing the bigger banks to bid on the failing banks, that's still a bailout. You're compelling them to do it. It's a bailout of a different kind. That's what it appears to be, in my opinion. The founder of hedge fund Citadel, Ken Griffin, has criticized the government's decision to bail out depositors of Silicon Valley Bank, saying it shows that American capitalism, quote, is, quote, breaking down before our eyes, quote, unquote. He believes that portions of it. He believes there has been a loss of financial discipline and that the government should not have intervened to protect all depositors. All right, we're going to stop there. My word. All right, so once again, if you want to read the rest of that, and this was a very good article, newsbtc.com. They're doing a great job over there. Tremendous job. All right, so now let's go here. Another bank. We have another bank restricting their customers from buying crypto. They don't want people to get in when this next bull run hits. This is from coinedition.com, and the article is titled, UK Bank NatWest bans transfer above 1,000 euro to crypto exchanges. What? So I go to work. I sweat. I might cry. I might bleed. That's my energy I'm putting out there to earn this capital. I come to your bank. I put my capital in your bank, and you're going to tell me what to do with it. What? You've lost your mind. If you think I'm going to continue business with you, you've lost your mind. There is no way anyone's telling me what to do, not just in life. Listen, I heed wisdom. This is not wisdom. Absolutely not. These people are going to tell me what to do with my capital. So I can only send 1,000 euro? Are you insane? I might have the opportunity to make life-changing wealth if the next bull run comes, but I can only send 1,000 euro? Wow. So anyway, let's just Let me just read the article here. The NatWest Group PLC is the latest British banking and insurance holding company to limit its customers' involvement with cryptocurrencies. As if crypto is the problem. When you have Credit Suisse, you have Silver, you have the SVB just went down, Silicon Valley Bank. You have a lot of other banks that are teetering on destruction with contracting margins and such. Like, come on now, over 10 of them. That was a day or two ago. They probably have calculated more that are at risk from the same thing that hindered SVB, the Fed. The same problem continues. It's just a matter of watching and the catalyst to see if any other banks are going to be having significant problems in the coming months or years. But crypto is the problem. Come on now. So it says here, according to a statement released on Tuesday, account users can only move a maximum, oh my word, of 1,000 euro or $1,215 a day, or 5,000 euro every 30 days. What? Oh, you banks, man, you're losing it. How are you? Stuart Skinner, head of fraud prevention of NatWest, said the decision was to safeguard the UK bank users from, quote, losing life-changing sums of money. Really? So they don't get a decision on their own. And everyone's not losing life-changing money. But you're going to use this as a blanket over everyone. Come on now. You know, you and I both know that's not the reason you're doing this. My subscribers already know the reason you're doing this. Simple as that. So anyway, everyone, just be aware that this bank here, UK bank NatWest, they're limiting what you can do with your capital when it comes to crypto. Let's just leave that there. Let's continue on to the next article. All right. We're going to end off with a little bit of gold news. I had three articles left, but that would drag the video on just a little too long. We're going to end off with gold news here. Okay. This is from fxstreet.com. And yes, we're going to cover gold. Gold makes me happy. And you know what? A lot of people found out why gold makes me happy. Because when all of this was going down, guess what they retreated to? Yeah, some people retreated to Bitcoin, but you know, a lot of people retreated to gold. All right. They had to wake up and smell the smelling salt. Hey, through all harsh times, gold holds its value very well. Now let's read this little tidbit here. Gold prices moved to the upside following the release of U.S. inflation data. XAU/USD climbed from near $1,900, reached levels above $1,910, and lost strength. The yellow metal is looking at the monthly high it reached earlier on Tuesday, $1,915. The U.S. Consumer Price Index, CPI, rose in February 0.4%, and the annual rate slowed down from 6.4% in January to 6.0%. Both matched market consensus. The core CPI rose 0.5% from the previous month, slightly above the 0.4% expected. The annual core rate rose 5.5% from the previous year, below the 5.6% of the previous month. U.S. inflation numbers offer no surprise to market participants. U.S. yield rose modestly, suggesting that the upside in gold is being driven by a weaker U.S. dollar across the board, and improvement in sentiment. If the upside in the U.S. yields continue, XAU/USD could find difficulties extending gains. Let me pause there. Okay, I'm just going to leave off there. They have some good charts as usual. They have more to this article. They're doing a great job. Check out fxstreet.com. But I'll say this. A lot of people retreated to gold to protect their capital, but they will extract that value. So I do expect gold to go back down a little bit again, because a lot of people are not using gold cards. So what they're doing is they're going and they're buying gold outright, and then they have to sell that gold, put it back into their bank accounts, that value back into their bank accounts in order to spend it. So they're not holding, they're not going to hold all of that in gold permanently. They're just here for a temporary time. They're here temporarily. Whereas a lot of other people who believe in gold as a currency around the world, they're using different cards that you can either use tokenized gold with, right? You have those offerings. Then you have cards that you can use the value of gold outright. They just hold that in a vault for you. You actually own that gold outright. But some of the processes move a little bit slower than tokenized gold, but you do own that gold outright. So there's different audiences that are utilizing gold for different purposes right now. But because you have this big group of individuals who are just using gold to protect themselves, in the short term, yeah, they're going to liquidate that at some point and gold could go back down. So I could be wrong on that, but that's the thoughts I'm having right here. I'm just giving to you straight from my mind. So, we'll keep an eye on things. Everything continues to look good. And we saw our theory correct that as things get a little bit worse, people will retreat to gold. So now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, let's get to the money.